The broadcast is now starting. All attendees are in listen-only mode.
How do you do, ladies and gentlemen? We'll be underway in approximately 30 seconds. If you can hear my voice, see my visage, see the opening slide, please acknowledge in the question and answer chat area. Just fine, I hear you, all systems go, something to that effect to assure that I'm not broadcasting into the ether. Just any sort of greeting to confirm that we're online for fun. Anybody? Got a number of people in the room today. Oh. Hi, ladies and gentlemen. We'll be starting in a couple of seconds. If you can acknowledge in the question and answer chat area, whether you can see my see the screens, see the slide, hear my voice, I'd appreciate that. Just some acknowledgement in the question area. Hi, hello, I can hear you. All systems go. Something to that effect. And I'll give you a couple of seconds to do that. And if I don't hear from you, I'm going to damn the torpedoes and full speed ahead. Anybody? There's something in the question and answer. Oh, hello, chat. So type something. Come on. I know you're out there. Anything? Somebody? Got about 131 people in the room. Here we go. It's Hannes. Very good. That's great, Hannes. That'll do for everybody. And we're going to get underway. How do you do, ladies and gentlemen? I'm your host, Seth Julian. I'm the chief analyst, capital markets analyst here at Bank So Trading. I'm 66 years old. I've been trading in the capital markets for about 53 years now. And oil has been very, very good to me. I put 3 kids through college, 1 through an expensive graduate school, and I love trading oil. I could talk about oil all day long, but I'm only going to limit myself to 1/2 hour. Today, we are going to look at get rid of this silly thing. Here we go. I'll move that out of the way. We're going to look at the crude oil inventory report. It's to be released in exactly 29 minutes, and it tells us it's released by the, and this, by the way, is in bank.com's economic calendar. It's available in many economic calendars. And let me just, I'm getting ahead of myself. Let me say that I respect and fully intend to address any question that's asked, not necessarily in real time. And we don't denigrate or derogate anybody who asks a question. The only bad questions or dumb questions are the ones that are not asked. So please feel free, and I will get to them. And don't be intimidated or inhibited in any way. The Energy Information Administration, and that's an interesting animal in itself, goes back to the 1970s and the first major oil shock when OPEC finally got its act together sufficiently to restrict the world's oil supply and drove prices through the roof and caused a nearly 10-year-long recession. Anyway, the Energy Information Administration's crude oil inventory measures the weekly change in the number of barrels of commercial crude, note commercial crude bid. That's important, held by U.S. firms. Level of inventories influences the price of petroleum products, which can have an impact on inflation. There are very few products in the world whose price movements can actually impact the price of goods economy-wide. Why is that? Anybody? Because every single thing that moves on the planet requires some form of refined crude oil to move. Jet planes, automobiles, buses, cars, marine traffic, you name it, and it's burning something that came out of the guts of Mother Earth called petroleum. By the way, that it will not be true for the rest of your lives, perhaps my life not, but by 2050, this stuff will be a rarity. There'll be 1 or 2 producers left, and most of us will not be burning anything to get anywhere. Now, I'm not going to go into this because it's confusing. Now, this histogram shows us over time the weekly reports. When it's above the zero line, there's an increase in inventory, and below a decrease. Let's go back to the calendar. It tells us that in 26 minutes, if we get an inventory count of 3.3 million barrels, approximately equal to or slightly, about 3.3. We'll get a black printout, and nothing really is likely to change in the price of oil. If, on the other hand, the inventory is significantly less, and by that I mean maybe 250, 200, 2.2, 2 million, 2.5, 2.5 million barrels. The printout will likely be red, meaning that's a bad uh, negative for the price of oil and therefore likely to fall. And commensurately, if it's above 3.3 in any meaningful way, it'll print green, meaning that's positive or bullish for crude oil prices. Now, let me state clearly, unequivocally, there's risk here. That's the theory of these today's live trading event. But it doesn't always work out that way. These are the capital markets. And lest you be confused into thinking that these fancy ass graphs indicate some sort of NASA like Kazakhstan cosmodrome scientific deterministic reality, no. All any graph in the capital markets is a graph of human emotion as it's associated with this asset. That's all it is. And therefore, because humans drive these markets, humans buy and humans sell and humans react and humans are fearful and humans get greedy, all sorts of things can happen that we don't expect. In fact, the definition of risk in the capital markets is the probability of the unexpected occurring, and occur it does. Let me just make sure that one small detail that we're recording. Yes, we're recording. That's all. So yes, Barbara asks if the recording will be available shortly. Within an hour or two after the session, you'll receive a link. You can view this again, should you be so inclined. Now, here's the price of oil on an hourly chart. Let's back out a little bit and get a little more perspective and go to a weekly chart. You can see the price of oil really has moved a lot over time. It was here. It was $10 during the Gulf War. Not the Iran-Iraq War. Excuse me. Hit $10. Of course, we have this retarded anomaly where price goes down to minus 40, but we won't go into that weirdness that occurred during the pandemic. We'll just forget that. Was it the pandemic? It was. Yeah, that was the beginning of the pandemic. We'll just forget that. We'll go into that. But a bizarre anomaly, nonetheless. If you wanted to sell oil, you had to pay people $40 a barrel to take it off your hands, and we'll leave it at that. But let's take a look at what we're looking at. On a weekly chart, we see that it's been in decline now since about April of 2022. So once the recovery, this is the drop off from the pandemic. This is the massive recovery in travel and transportation and freight movement. And this is a decline, hard to say, but largely on the back of an inflationary environment and a slowing world economy and everywhere in the world but the United States. The U.S. economy is very, very robust, as witnessed by the non-farm payroll report and the effect on the U.S. dollar since then, which was coming in on 2 weeks ago. Now let's talk about what this oil reserve is and above ground, below ground. What does all this mean? The reason we say commercially held or above ground is because there is a great deal of oil held below ground in what's called the SPR, the Strategic Petroleum Reserve. Now these are salt caverns deep underground on the Gulf Coast that the United States government, by the way, many governments in the world have filled up with crude as an insurance policy against a sudden supply shock. And the United States stores, last time I looked, something like 1 billion barrels. Now that may sound like an enormous amount of oil, except it isn't really when you consider they use 10 million barrels a day in the U.S. alone. So 10 million barrels a day, billion barrels reserve, that would keep them going for about 100 days. Not so much. Sounds like a lot, but these people consume. Anybody been to America? Do you know what kind of vehicles these people are driving? Well, I rest my case if you do. So that's why we emphasize above ground and commercial quantities. This, by the way, is a map of the United States, obviously. And this is a little town called Cushing, Oklahoma. Population about 7,500 people. The hell do I care about Cushing, Oklahoma? I'll tell you. Anybody know? You can already get. Here's a clue. You can already see the clue here. By the way, if you have any problems, anybody hearing, please let me know on the question and answer. That's where I'm looking for feedback. The WTI contract, and that's the contract we feature here, crude oil, CLI crude oil futures. This is the U.S. standard benchmark oil blend. And keep in mind, oil is always a blend. It's like whiskey. There are other single malts, but refineries don't use single malts. They use blends, and there are different blends. There's Brent, there's crude, there's the Ural blend, which is the Russians export. There's the Saudis sour blend. There's the Libyan light sweet. There's a not. They refer to it even like it's some edible, which by the way it is not. Anybody who's been in the presence of a mere cupful of this stuff can become violently ill. Trust me. Think of and what is crude oil? After all, what is crude? When we say we burn hydrocarbons, it sounds scientific. What are we burning? We're burning organic garbage. Okay, think of the worst garbage you can imagine. Garbage strike in the summertime, disgusting. Well, let's think about taking all the garbage, compressing it, cooking it, heating it for millions of years. Gross, right? Yeah. Well, our society, our socioeconomic system is based on this stuff. And therefore, it's crucially important about how much inventory, where it comes from, et cetera, et cetera. And so there's a lot driving this price. So those contracts deliver in a little called Cushing. So there's 7,500 residents, and the rest are the oil oil storage facilities. Some of these facilities, I won't go into it, some of these facilities hold 100,000 barrels of oil. That's 420,000 gallons, or I don't know, what is that, 1,600,000 liters in round figures, Cushing, Oklahoma. And why is that important? Because Cushing takes in the oil from all over the North American region, and notice it's reasonably close to here, Houston, the world's oil capital. That's right, and Galveston is its corresponding port. There was one photo I just want to show you. This is where the strategic oil reserves are. They're underground, but they're right next to the oil industry's regularly operating ports. Now, here's a reason that here's a little graphic that may show you why oil can be so volatile. See the way most of it seems to be coming out of this region here? It's hidden. This region is on fire right now. There's an active shooting war in Yemen, in Israel, in Syria, in Lebanon. Certainly Iran is involved, this big green country here. So it's very sensitive. Something can go wrong and constrict this supply, price is going to go up. And you'll notice that a great deal of this oil originates in a very, very unstable part of the world. Not to mention Russia's, this is a dated map. This arrow has since been reduced following the breakout of war in the Ukraine, and now flows eastward into China and India. And we'll leave that at that. If there are any questions, please feel free to ask. Yes, so let's talk about the setup of the oil trade. It's really easy. It's all we're trading is oil. There's no. Now this is the platform, obviously. I am going to go to commodities, and you'll see crude oil. Notice that I've starred the little blue star. That feature puts the asset in my favorites bucket, and whoa, lo and behold, here's crude oil. I press on it, and voila! On the 30-minute chart, it seems to be going up nicely. 15 minutes, no doubt the same. 1 hour, probably a little less so, and 4 hours, then no, this trend is well in tow. Now, this is what I want to explain about the trade setup in particular. First, I'm going to explain the theory, what we expect to happen. In the event that the oil report comes out approximately equal to 3,300, and therefore the outcome is, let's say it's green. Let's say it comes out slightly less. Let's say it comes out 250, 280, 260. It's green. Because there's less oil in inventory than we expected, we expect the price to pop. I'll get out of this weekly chart. This is no longer useful. I'm looking at an hourly chart. We expect this price to go up. Logically enough, supply and demand, basics of market mechanics. And certainly the trend is up. It's above the 20-hour moving, 50-hour moving, and well above the 200-hour moving average. And that, one of the beauties of technical analysis is that if we change the horizon, or the point, as I like to refer in graphic terms, we see holds. Trend is up, but the averages changes. Averages change. It is on the daily chart. It is now above the 200-day moving average. And let me just digress a moment and say what these moving averages mean. There's a quote. There's one of my favorite quotes from Oscar Wilde's book, Lady Windermere's Fan, where Lord Darlington says to Lady, describes what a cynic is. A cynic, according to Lord Darlington, i.e., according to Oscar Wilde, is somebody who knows the price of everything, yet the value of nothing. So if I tell you that the price of oil is 78.51, you know that it just changed hands at 78.50. You don't know if the buyer got a bargain, if the seller got taken advantage of, or vice versa. However, averaging price over time tells us its value. So the pink line shows us 20-day, the value that the market has placed on this asset for the last 20 days, the last blue line, last 50 days, and the brown line, 200 days. And those correspond approximately to a month of trading, assuming 5 days a week, 3 months of trading, and 1 year of trading. So we can see that the market is, the price of oil is now above what the market has valued it for the last year. Significant piece of information. Why? Anybody? You're a slow crowd. I expected a little more oomph in the responses, but okay, I'll let you off the hook. Because prices trend. And I mentioned this is not a deterministic chart. This is not engineering or science. This is social science. This is a graph of people's emotions. Prices continue in a trend because the prevailing psychology in all capital markets is that of the herding mentality. And I don't mean to say it's a mob or violent or in any way uncontrollable, just that it follows. It's a herding engine. And we do a session and later on about specifically about the psychology of the market. But just quickly, when you see these animal shows of enormous amounts of livestock on the hoof moving in unison, or schools of fish in what is obviously a beautifully choreographed, mathematically balanced dance, they're following along. Only the ones in the front can see the risk, predators, depressions in the earth, watering holes, objectives to search. The rest of them have to follow along. How do they follow along? They follow signals from the one in front of them. His ass moves this way, his leg moves this way, so I know to move this. And it happens in like electrically fast. These schools of fish that move like swarms of locusts is because they're herding. They're following each other. Signals. Okay, lots of people look at these averages. When it breaks above the average, they get excited. When it falls below the average, they get depressed. The herding instinct, the mentality to continue in a similar direction. Now, that's the price of oil. All we have to do, and that's one of the beauties, that's why I like the live trading events. I don't have to do, think, predict, or understand anything. All I have to do is sit on my little hands, wait till the release of the report. Wait till the release of the report. It'll print out right here. And that last minute is always particularly exciting, and it takes about an hour to unfold. It's always and I've been doing this for years and years, and I still get excited about it. I still get you'll see it's fun and exciting. Once we see the outcome, then we look to the chart, and we can look at either chart for that matter. It doesn't matter. We're only looking at one asset, unlike the non-farm payroll report, where we look at 6 assets. That is to say, the Aussie dollar, euro dollar, pound dollar, the pound dollar Swiss, the dollar CAD, and dollar yen. We're only looking at oil here. So we wait to see the actual market reaction, and we'll break it down to a 1-minute chart. By the way, you'll see oftentimes a lot of pre-market nervousness, stress, people trying to outguess, second guess, outsmart. We don't follow these people. They're always wrong. We don't care. We wait and see the reaction. We don't think we're going to outsmart it and take the position before the other guy. No. These guys are always wrong. We don't really follow them. or they're wrong at least half the time. Clearly not sufficiently informed to take a position based on what they do. We we follow what the market does. The crude oil contract, by the way, trades in the New York Mercantile Exchange and the NYMEX, and that's where, and you know, it trades there and it delivers. These are physically delivered contracts. These are not derivatives. These are not CFDs. These are actual contracts in the oil market for delivery. They deliver in Cushing at that location. You have to get this stuff. Yet mostly what you do if you're delivering it, you offload it in the Gulf Coast, and it gets piped up to Cushing through a massive pipeline system. I think Google Earth is a little tired. Get a little slow reaction. Forget Google Earth. Normally, I'm the one that's tired, but okay, we don't care so much. Yes, you'll even recall the Colonial Pipeline System. Those of you who like to read and study about this, and it was a victim of a Colonial Pipeline. By the way, it was a great stock to own. I owned it for many years. Many people did. It was a real cash cow. Why? Once these pipelines are built and covered up and stored, there's fairly little maintenance, and it's a constant cash cow. The Colonial Pipeline brings principally refined products from the Gulf, and most of the refining is done in the Gulf. That's not happening. And it's piped out throughout the United States in large underground pipe networks, and then distributed by truck to the final destination by tanker truck. That was held for ransom by crooks, and the company paid off, and they had to pay off in Bitcoin, about $4 million. They paid off, and the FBI actually solved the crime and recovered something like 92% of the cash, because the crooks were not as bright as they thought they were. But anyway, pipelines, that's how this stuff moves around. So we wait for the reaction, and now we're going to bring this chart also to a 1-minute chart. Again, there's a lot of noise. We don't care what these guys think they're doing. We don't follow them. We're not really interested. The price has fallen off. We don't know why, nor do we care. We only care about this phenomenon, the actual release. So we're talking T-minus 8 minutes and counting. Let's open up the floor to some questions. Here, Irv asks, when you refer to blends, what do you mean? Well, let's take the case of Brent, Irv. Irving, I call you Irv. His name is Irving. Irv says, with regards to the blends, the classic example of this is Brent. There is no such thing as Brent. Brent is a blend. It's like Dewar's whiskey. Dewar's is a blend of a lot of different types of whiskey, not types of whiskey, different distillation runs that they blend to have a uniform taste. This is the key. People who like blended whiskey like the uniformity of it. People who like single malts, these sort of mavens, these connoisseurs, if you will, of whiskey, they take a certain pride in enjoying a whiskey that tastes and smells like old gym socks. Okay, the blend makes it consistent. The single malt makes it unique. Refineries aren't interested in unique. Refineries are interested in consistent, regular supply of a blend that allows their cooking facility, which after all is what a refinery is. They cook the oil to cook out the bunker fuel, the diesel fuel, the kerosene, the benzene, the jet fuel, the butane that's in our little lighters. All of those things are things that bubble off, boil off, I should say, at different temperatures, and that are sucked into. If you've ever been to a refinery, it's a plumbing fantasy. It's a pipeline wonderland, because as these different products reach their boiling point, many of them below the temperature of water boiling, they're taken away and further filtered off and sold as refined product. So T-minus 6 minutes and counting. So that's the idea of the blender. I hope I answered your question. Hi, PNR. Good to see you again. Is there a difference in trading strategy between trading WTI and Brent? No, it's the same phenomena. The reason we focus on WTI, PNR, is that the United States is head and shoulders above the rest of the world in terms of transparency. It would be nice, certainly, if the If the Saudis and Saudi Aramco would have such a report, forget it. It ain't going to happen. The reason that the Saudi Aramco IPO did not take place in New York was because the New York authorities felt, well, in an oil business, knowing your reserves is an important part of the disclosure process. Saudi said, no, forget it. You were out. And they listed in Riyadh at the Tadawul. This is one of the best kept secrets in the world. How much oil do they really have? In my estimation, and again, this is an estimation, they have way, 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 way more than anybody thinks. And that information would be disastrous to the price of oil. So they keep it a big secret. But no, in terms of actual trading PNR, they're the same. Although on this report, we only trade WTI. Is that clear, sir? Brucey asks, what is the difference in the blends? We got 5 minutes. I suppose I can digress a little bit. The difference is two specific metrics. The sulfur content, which is referred to in a bizarre culinary allusion for something that's utterly gross as sour or sweet. Sour indicates a higher sulfur content, and sweet, of course, a lower. And then there's the specific gravity, or what we as laymen would probably refer to as viscosity. The thicker it is, the gooier it is. In science, in laboratory terms, it's called specific gravity, whatever it is. These are important to refiners because they can only operate within a certain band. They can't refine everything. I'll tell you, and here's an example that will show you something that explains. Notice this massive amount of oil from Venezuela. This is an old map, by the way. Venezuela has not been exporting this much oil for some time now, for 2-3 years. But what they did do, they have a particularly sulfuric blend of oil that the U.S. Refiners need. And so they take in a huge amount of Venezuelan oil for their blending and refining processes. That's why you've got some of these strange paths. Have I answered your question? Great. Excellent. Wonderful. Any other questions, ladies and gentlemen? With T minus, give me on minus 3 minutes and counting. Any other questions, ladies and gentlemen? Barbara asks, do the Saudis trade on this event? You bet they do. You bet they do. The Saudis are married in a very deep and intimate way to WTI. They work in unison. In fact, one of the reasons we have, I don't want to I'm careful about the clock because we have to pay attention. By the way, we have to keep our heads on fairly tightly. In all of these live events, let me digress, Barbara, about your question. In all of these live events, it's important to keep your head screwed on tightly because it's very easy to mis-execute. You got to keep your head on straight. You got to keep a level head, and you've got to know what you're supposed to do. I'll hold your hand. We're going to hold our hands together through this. We'll walk through together, but stay calm. It doesn't matter if you execute an extra 5, 10, 15, 30 seconds later than everybody else. If the trend's got legs, you'll make money. You don't have to get the whole trend. But if you screw it up, you're not going to make any money at all. And you may have a difficult time getting out. Okay, we're T minus 2 minutes and counting. Yes, one of the reasons the oil prices remain so stable during the terrible, terrible conflicts that are taking place in the Middle East, which we haven't seen in, 50 years or something, is that the Saudis have maintained their supply despite a very, very dangerous situation in the Middle East. So yeah, the Saudis are deeply woven into this. James asks, do we only care if there are a difference between forecast and actual? Correct, sir. Correct, sir. That's exactly the only thing we care about in any of these live reports. It's just the relationship. Okay, we're going to stay focused on this now. The deviation between the expectation and the actual. That's it. Again, I emphasize this is human emotion. Okay. All right, let's buckle up and get ready for this release. We're expecting 3.3 million. Anything greater than that is going to drive the price up. Once we see that in the charts, we will react and take a position. Let's just make sure we're up to date on the platform, that we're all logged in and refreshed and ready to trade. Okay, as I mentioned, this is the longest minute in the economic calendar. These waiting for the time to release, but again, 1 minute and counting. According to my system clock, we've got 2 minutes and 2 seconds. Now it just registers what. There's always latency. Everything is a little bit different, not exactly the same, but you get the idea. Any other questions, ladies and gentlemen? All right, great. So 1 minute and counting. Under a minute now, probably. My system clock indicates 40 seconds. There's a lot of differences. There's a lot of latencies. By the way, there's just to brief you on one couple of possible risks. If this is a huge blowout, there is the risk that we may not get filled. The servers may get jammed up. I haven't seen that in years. It's a possible risk, and of course, there is the risk that what we expect not only does not occur, that the opposite occurs. In which case, I personally never trade if I don't understand what's going on. I'm certainly going to put my hard-earned money into it, and that's just a no trade situation. It happens rarely, but it does happen. You know, the event is highly positive. It prints out in green, and then the price falls. Why? I don't know, nor do I care. I just know my money is going into that particular opportunity. Okay, here we go. Holy moly! Holy moly! 12.1 million. 4 times the amount of oil. Price is going to fall. We're going to sell. Sell the oil, ladies and gentlemen. That is the move on the on the Aussie CAD, you fool. Go to favorites, go to oil. It switched back when and we're going to sell the oil. I hope I'm not too late. Invest, and I'm order processing. Let's hope. All right, ladies and gentlemen, this is a huge blowout. A huge blowout. We expected 3 million, and there are now 13 million barrels. That's over 4 times the amount of oil in storage than was expected. The price is likely to fall. Let's take a look. The price is falling still. My short, because I misexecuted, you saw, but it's holding on. It's holding on. I'm still not in profit yet, but hopefully it's gonna come back. That is such a massive amount of deviation, according to refer to James' question. The difference between the expectation and the actual, what is that, 300%? This thing probably has legs, and I'm not going to be exiting this just so quickly. Here we go. It's breaking down again. Again, just to remind you, it's stunning. It's stunning. We expected 3 million. I'll show you the histograms. I don't know if it's been updated yet. Um, yeah, no, that's February 7/2. That's the last one. It's last week's. It's not even registered on the histogram yet. But look at that. 12 times, 4 times the amount. And it's red and it's falling and it's exactly as we expected. Okay, I don't know if I'm going to make any money in this because I got in so late because I refreshed my screen, but I didn't. I thought that I was still in the asset. Happens to everybody. I'm not going to let this run too wild today, but it looks like it has legs. It definitely looks like it has legs. Questions, ladies and gentlemen? Okay, the volume is not so AI, but wait, in such a massive deviation, it's quite possible that it'll take a little time for this to sink in. Okay, the traders like us who are avid traders follow this. Not everybody does. It's going to take a while for this to filter through. But my opinion, I could be wrong. Which won't be the first time nor the last time. I think this thing has legs, and it's going to continue down. We'll see. My little position would not indicate that, and I'm not going to let it slide too much, but I'm willing to let it run and see how I do. Now, Vivian asks, why did you not put stops? It's a great question, Viv. And I'll tell you why. On live events, I don't use stops because I don't know where to put the stops. Who would have thought? Who would have thought? Who would have thought this? Nobody thought that. Nobody that they surveyed. Nobody that knew what was going on would have thought that. So I also didn't. I don't know what to stop. So I watched this like a hawk. I don't let it run out of control. I've got a few losses, a few dollars here because I got in so bloody late, and this is an expensive contract. But still, it's 1,000 barrels worth of this contract is $77,000. It's the price times 1,000. So here it's going south. It's not doing any good. I'm not going to let it ride too long. I don't like the looks of this, but it's a 1 minute chart. So I got to be a little patient. It had a massive fall for 3 minutes. It's catching its breath for a minute or two. I'm not going to uh, let it slip away just because I'm in a slight loss. I'm going to give it a little breathing room. Questions, ladies and gentlemen? All right, we're coming into 5 minutes post report. I don't like to hang around too long, but this is a real blowout, and it will be worth sticking around for a few more minutes. So let's open the floor to the questions, ladies and gentlemen. If you have some, let's put them on the table and see what we can do. Anybody? Okay, this looks like it's moving. This looks like it's moving. Can I put volume on this? By the way, for the volume ratio, I think is all we have. We'll try the volume ratio. Not really so sure what the volume ratio is, but doesn't show me anything, so get rid of it. I don't know what the volume ratio. I know what the volume is. Okay, we're in the green. So far, so good. Again, just a little note. What do they call wicks? These wicks on the candles indicate a battle between the bulls and the bears. They're battling to go up. They're battling to go down. Meanwhile, the price ain't moving so much. So this battle is proving to be quite vigorous with no uh, discernible outcome. So we're going to hold on a little bit. Is it possible that the market reaction to such an event can be slow? Yeah, sure it is, PNR. Absolutely possible. Um, e.g., only take 30 minutes later, et cetera. Yeah, absolutely. This is not the NFP. This is a world. This is not as popular. It takes a little longer to sink in. I think that it's pressing here. I'm going to try and get out. If I hit 100 again, if it gives me that 90, 100 again, I'm going to get out, take a little profit and leave. 60, 80. Come on, let's go. Sorry, I wasn't referring to you. As you can see, all these years trading, I still get excited about this. I love trading oil. It's fun and it's exciting. And I think I'm going to call it a day. If I can get anywhere here, 60, I'm out. Oh, I missed it. 50, 30, 40. Oh, that's it. Fucked it up, unfortunately. Okay. You see the idea. Lorraine says, I love the excitement. You bet, Lorraine. We all do. This is a fun business. And I think maybe I should get out here and get out with an even. I don't really feel like hanging around and looking for that. But you got the idea. Now watch, it'll go down beautifully. Which, by the way, is no problem. If I sell here again because I think it's going to go down more, I could do that again. I could get out and continue. I'll show you. Sell, invest. I got the fill. I'm down 240 now. Let's see if I can make any money back again. Notice that there's an immediate loss. Why is that? You have to pay for the cost of the execution. You have to cover your expenses first. So let's see if that was a worthwhile maneuver. If not, I've certainly doomed myself, but I'm not going to let this loss run too deeply. Questions, ladies and gentlemen? Yes, Lorraine, it is a deeply exciting and fun event. I'm sure. Did anybody make any money? Did anybody execute a little more uh, successfully than I did? It is exciting. That's why we're into it. And you obviously don't put large amounts of money into this. It's far too volatile. It's fun and it's exciting. And I see it's going the wrong way. Let me see. This probably is going to turn into a little loss. There we go. Here we go. Here we go. It's coming back. Coming back. It was a silly thing, but I wanted to prove a point. It's never too late. If you think that you got out early and you want to get back in, get back in. Take your profit and get out and get in again. In my case, I took with no, I ended with no loss, which is the same from an accounting point of view is a profit. But there's no reason to feel that it's too late. I'm done. I can't get in again. No, that's absolutely not the case. You can get in again. Whether I'll make any money, of course, is a different question. So, ladies and gentlemen, it's now T plus 10 minutes. Any other questions? Neil is up 200 so far. Excellent work, sir. Excellent, excellent work. If I had stayed in my position, I would probably be up by 200 as well. But I got jittery and panicked and didn't stay as long as I should have. But it happens. I'll probably get out again at zero loss and consider my day successful, which can be, you can view it that way, but in the long run, that's a losing proposition. Any other questions, ladies and gentlemen? Yeah, Neil, that's really good. $200 so far, excellent. Anybody else? Anybody else making money today? Okay, this thing definitely has legs on the minute schedule. Just click up to the 5-minute schedule. Private, you see that it's continuing to fall. This definitely has legs. I think we could probably 200. I'm sorry, it's Neil's similar comment. Come on, baby, come on, let's get moving here. Get moving. I find that I have direct influence on the market by screaming at it. Still negative, but almost there, says Pinar. Yeah, you had to execute better than I did for sure. But hold on, be patient with these trades. Hannes says, I enjoyed the demonstration first webinar. Thank you very much, Hannes, for the compliment. I appreciate that very much. Lorraine says, 123 Rand. Excellent. Beautiful. Beautiful. Me, I'm in a small loss, but here we go. Thing definitely is going to have legs, no doubt about it. My opinion, and I say that quite measuredly. Beware of anybody who tells you that they know exactly what's going on and why. That's nonsense, bullshit. There's way too many. There's way too many people participating in these markets to know what's really moving all of them. When you hear the commentary at say something like oil moved today because they're full of shit. They don't know what they're talking about because they don't trade. What drives these markets is a complex bouquet of emotion, fear, greed, all sorts of stuff. And all we can do is hopefully just, attach our little train to a little, carriage to the engine and hope it pulls us out of loss. That's all we can do. Why, what, who, when, where, why? This is all you need to see is the chart. And let me say further, well, I won't get into that now at the moment. Let's see if I can make $1 or $2, something, for goodness sake, show a little profit for the day. We are coming into T plus 12 minutes. I think I'm going to end this here. Well, it's taking a breather. Maybe I won't. What this is was people taking profits at the price rising a little bit. Let me see if we can see this on the volume here. Yeah, you see the volume's high. The volume is very high. It's way above average. It's dropping off. But we're on the 1-minute chart. So volume is high. And just to explain the correlation between volume and price, volume is to the movement of price what momentum is to the physical acceleration of a physical object in reality, in nature. If price moves on a lot of volume, that tells you that there are a lot of people who are behind it, and vice versa. Here, price rises, volume is low, way below average. It tells you this doesn't have a lot of sentiment behind it. That's what traders call momentum, sentiment. Okay, let's see if we're anywhere closer. My sense is no, we're no closer. They're up to 270 again. I might get out of this, give it one more round. All right, we'll see. So, ladies and gentlemen, I'm going to bring this session to a close. You don't have to pay attention and stick around and watch me lose money. Um, Let me just say on behalf of the staff and the management here at Bank So Trading, we are always humbled and very grateful to you for your patronage of us as your online broker. We do the best we can for our clients. We don't win all the time. We don't pretend to win all the time, but we do our best, and we hope that this demonstration was an exemplar of that effort. Um, uh, Remember, the sine qua non of success in our business is to take more money out of the market than you put in. But you're going to put in. We all do. Nobody doesn't lose. But on behalf of the staff and the management, ladies and gentlemen, I'm your host, Seth Julian, wishing you all the ability to trade with confidence, ladies and gentlemen. Bye-bye for now. My pleasure, Lorraine. Thank you for your participation. I appreciate that very much. We all do. We all do.